Okay. All right. So, and everybody can hear, I guess. Great. So I can, since it doesn't look like there's anyone new here, what we'll do is focus on applying core strategy. Since our last session, we have a lot of really good trades that have been working out really well and moving in the right direction. Focus on longer term trades, shorter term trades here. I have a whole list of markets that I can run through. But of course, I'm here for you. So if you have any markets you want to run through or have any questions, just put them right into the chat there. Otherwise, I'll run through my list and we'll go over the major markets. And of course, the most important market to start with is the dollar. Right? The dollar is just such a key market for all others. So let's dive into that. And again, if you have any markets you want to look at, just let me know. So the dollar's been, after getting close to the, there's a level down just below, right around 90, but it doesn't look to be I'll show it to you right here. Okay. So level sitting down here, but I'd be careful with this one. This is a rally-based rally right in the middle of this whole move. So often those are a trap. So we just have to be a little more careful with that. And when you look at the larger time frame, what do we see in the larger time frame? Let's get rid of that line for a second. More supply above or more demand below. Right? The market has moved out to the 103.40, and of course, a couple of years ago it was down at 80. So, long story short, we're sort of getting back to the middle of that, which in the big picture is, at or around equilibrium. Okay, and because of the supply levels above, demand zones below, price should stay somewhat in that range. I would argue, though, that ultimately the dollar is likely to go lower. Right? If you look at the quality and number of supply zones above compared to really, no real demand in the larger time frames here until much lower, that's what's, building that case. Does that make sense? Okay. All right. I just scrolled back. Yep, we could definitely look at the euro. Yeah, if you use just the add EC or the add EC equals 103XN, no, most of the time you'll be totally fine there. It's just the whole purpose of that is around expiration when the contracts get tied together. So yeah, we can certainly take a look at the euro. I want to spend a little time on the dollar just because that's the big market that kind of impacts all. So let's go to the euro. Here's the chart that we've been playing off of. Remember, we said the euro is likely to stay in this range for the foreseeable future until this supply or demand is gone. So obviously, looking at the chart, a lot of the supply is already filled, which means the euro is likely to go higher. And again, that supports the case for dollar lower that we just talked about. Okay, that's a 4-hour chart sending us that message. Let's go to the daily. And when we do that, you're going to see there's a supply zone that shows up about 121.60. Now, we're not that close to 121.60. And this supply zone is the same level as that dollar demand zone down around 90. Okay. So I think so many people look at these levels as like, wow, this is the greatest level ever, and it's when price hits there, it's going to fall. And I think that's why that's a big reason why these levels in the middle of moves. That's why I'm always cautioning you, rally-based rally, drop-based drop. Those are okay and can work, but there's a nice healthy profit zone. But don't forget, those are in the middle of moves. where the rally-based drop and drop-based rally carry the strong odds as they are out at the extremes. Okay. All right, let's keep going here. If we go down, it's hard to not look at this. It's hard to move off this market without actually an idea here. So let's do that. We're down at the 60-minute chart, and this is an area that I'd definitely watching here. Let me just put some lines around it, and then we'll go down to a smaller time frame. Well, let's start with a smaller time frame. Here we go. Okay. So when we look back here, this area has been, this area of supply has produced a strong move to the downside. This area of supply has produced a strong move to the downside. The next level that we're looking at is this one right here, which is really, rally base drop, and it's out at the extreme. So we like that. Okay. This level comes in 120.65. All right. What's nice is, and this will take a little time to play out, but I know for those of you that have been with me for a while, you'll know what I'm talking about here. All this price action here, is that the picture of filled orders or unfilled orders? It's a picture of filled orders, yes. And don't ever forget, what we're focused on here, the whole point of being here is to figure out where prices are going to turn and where prices are going to go. Right? Filled orders, or I should say unfilled orders, facilitate prices turning. Filled orders facilitate price movement, right? Filled orders facilitate price movement. Unfilled orders cause prices to turn. So we have the picture of filled orders up here, so prices should turn lower. Here we have the picture of filled orders, so price should move through this area very quickly, kind of like it has been doing. Does that make sense? All right. Because a lot of newer people look at this and say, well, I'm not going to short here because there's all this price action below. That's why you should short there. All that price action means the orders are filled. So just keep that level on your chart. That's kind of a mix between short-term trade, long-term trade. That's certainly not a little day trade. But it seems like every time I say that, the trade meets entry and works out in the same day. So anyway, let's move on. And again, I can just keep going through my list. But if you have a market you want to look at, just let me know. And okay, let's go to let's just run through the spot Forex markets in the bigger time frames. Just 1 second. We'll get the here's the pound. Okay, and I want to go down to a little bit smaller time frame. Whoops, not that small. And then the yen is where I really want to end up because there's I have the yen marked for some good stuff. Okay, so what we want to do is put a horizontal line across the top here of this. We want to scroll left until we hit price. There it is. Okay, so you can see right here, this is that same kind of level as the euro, and it's a little bit higher. Now notice price so we see price just touches that line, and it's doing that because that's how we put it in because of those two highs. What we want to do back here is say how deep was that into the supply zone, and how deep was it? Not at all, right? Just barely touched the zone. So this is a level we can probably play off certainly more than once, if not multiple times. Make sure you understand, and this is kind of a learning moment too, along with a probably pretty good trading opportunity. the high is this 130, right? 136.17, right around there. I'm saying over here on to the right. But make sure you understand at 18, 19, 20, 21, all the way up, and there's a lot of price points in here, none of those unfilled orders have had a chance to be filled yet, which means a new high into this area is shortable. Does that make sense? And I always want you to understand the logic. We could just come in here and go over trade after trade after trade, but then you're not getting any of the logic, and the logic leads to confidence to understand and start taking positions, and winning trades builds confidence to just own the strategy. And that's really the goal. Okay. Yeah, the demand in pound, we're going to have to go down a little bit more, right? We don't have a clear picture of demand here. So let's, again, the same reason why a doctor looks at multiple x-rays, we're going to do that here. We don't start to run into really anything significant until we get down to the 133.70, this area right here. And if prices get there, you're probably going to have some supply above. So, and there's no guarantee that you're going to go up and make a new high before coming down to the 133.70. So this is certainly a buying opportunity down here if you want it to be. It is rally-based rally. And like I said, be careful with that. It's, those are going to be in the middle of moves, which this is. So we want to make sure there's a nice profit zone. Okay. Remember, your profit zones off rally-based rallies and drop-based drops are always going to be smaller than off rally-based drop and drop-based rally. But either way, you have to make sure that they're all very, very, very fresh. That's the key. That and the profit zone. I was going to go to the end, but yeah, we can look at let's look at your Euro Aussie. Okay, let me get the 4-hour chart back up here. Oops. I have the 4-hour chart. Okay. You're looking at the 1 hour, and you're looking at the one, okay. So you're looking at this area up here. And well, two things. You've already had multiple declines from that level. But the other thing is this wick to the upside almost disqualifies this whole area, certainly in taking it again, right? Keep it really simple. A supply zone means unfilled sell orders. And if you're thinking there's a significant amount of unfilled sell orders in this base, then how did price trade all the way up to here at the end of the base before dropping? In fact, is it even possible for that to happen? It's not, right? So we'd want to go to a smaller time frame and find something that's a little more fresh and higher quality. So let's go ahead and do that. I'm just going to scrunch skip right down to the 30-minute chart. Again, we're just coming into these highs here. We get some more data. We're not good at finding your fresh levels. We're just going to run right through it now. We start with current price. We go to the high, and we keep going left and higher without cutting through candles, and until we find a fresh supply zone. So that's not supply, right? So we keep going left and higher. That's not supply here, right? It's big wick to the upside, and all this is a pullback into that. So we go higher. Now we're going to have to scroll. Okay. These are not supply. These are just pivot highs that are into supply. Nice level here, again, but price has already been in there. Here's the rally-based drop with that base coming out of it. So this is the area where we'd find the higher probability short. And then I'd want my stop above the high. We're not that close to that level, but we're also not, it's not out of reach this week for sure. Let me pull this back on a 60-minute chart. There you go. Does that make sense? Now, this type of trading, you're going to get fewer trades, but your trades are going to be higher probability and all that. Does that make sense? Okay. All right. So let's move on. Let's go back to our yen. We can go to we can stick to the spot market. Here's the yen. Here's a level I was looking at. I've kept it on the chart because if price went back up there, it's the same concept, I think, as the pound that we were talking about, where make a new high into this level. So you see how we have this pullback here? Now that we've had that, let's bring our level up to here. We're actually going to have to look in a smaller time frame, but let's go down to a smaller time frame and look. But this is the area, and I believe it actually includes all that. But let's go down. I'm not suggesting you take a trade off this daily chart, but just so you have a general idea of the area. Now we can go down to a smaller time frame and find our opportunity. Okay, but with that, there's we're likely to find demand also. We may. Don't forget, in the back of my mind, when we're running through all these currencies, I am thinking about the dollar. Okay, let's get rid of that. Whoops. I'm sorry. This is a 60-minute chart. I didn't want to skip down too far. We'll probably get there quick, but there's a level I wanted to show you on the 4-hour chart. Okay. So here's where we're at. And again, keep the dollar in the back of your mind. Notice here, this is another little subtlety that I think will really help you. You see how this demand zone here works perfect, but this one didn't? Why is that? These look the same, right? These look actually almost identical. Maybe one more candle up here, but the reason why this works better than this one is, well, that's not even the main point, but obviously this one's higher on the curve, so less likely to work than this one. This one has more candles, meaning less unfilled orders than this one. But the point is, I know for sure that at 110, the demand zones are not holding, which means I'm getting into a price range, and I'm thinking over here to the right, not any candles, but I'm getting into a price range where I should be looking for supply. The only thing that would increase those odds is look for fresh supply with a big profit zone to the downside. So we go left and higher, and we get to this area here. And we would need to stop above this, that upper line is not the exact stop. There's 112.50. So, okay, so we're a little bit under that, but that's okay. And where would the target be for this one? If you had to pick a target, where would you go for that swing trading target? And forget I even said swing trading, just where would you go for that target? By looking at the chart. Carlos, yeah, exactly. I just saw your note there. Yeah. So none of these demand zones are relevant. We do have one here, and yes, it's rally-based rally, but for a target, we want to pick, we're not looking for super high quality. We want to pick a decent opposing zone and put our target before that. And so if I put this line here, now our available profit zone is from this black line, the closer one, right, the proximal one, to this black line, which is the opposing level. We want to take about 80, 85, 90% of that. You just pick the rule, the number that you want in your trading plan, and I'm just going to, let's say for me it's 80%, so I'm just going to eyeball that. We have a tool that we can use to find that, right? You can use your fib lines and stuff to find that, but and the 80, 85% means absolutely nothing. I just don't want to do any thinking. I know to be successful that trading needs to be rule based. So we put it right up in here. That's roughly 80% of this move, and there you go. Okay, so we'll leave that in. Obviously, selling short here at the proximal line with our stop above the upper line. Again, all very rule based. Okay, next market, or again, I could just keep going, not a problem. Sure. AD, yeah, let's look. I just pulled up AD actually before you posted that, so good thinking. Let's look at AD. Oh, I never mind. I get what you're saying. You're saying a demand or supply zone. I thought you meant Australian dollar. It's funny because I pulled it up at the same time. Yes. Yeah, I would say most often. Okay. If you're looking at an area of supply, there shouldn't be much trading above it. If you're looking at an area of strong demand, there shouldn't be much trading below it. CL. Let's go to CL. These lines are actually stuck on the chart, so I can't get rid of those, but that's okay. CL is near the upper part of the range. The level I've been looking at and working off of for CL, it's right up in here. We gapped up last night, traded a little bit higher into it, and now we're falling. I can show you what this looks like on a smaller time frame. I would certainly be comfortable shorting another rally into that area. Okay. There it is. All right. This is coming out of this rally-based drop, which we see so many times, is what we're looking for. But be careful in CL because, even if prices come down, there's an area below where we'd probably want to be a buyer. Which is right here, about 48.40. Down to 47.70. Okay, does that make sense? Let me just go to a couple more time frames. If you're a short-term trader, if you day trade oil, which is a great market to day trade, there's a really nice area up here. You've got this whole rally-based drop, and you know what's to the left of that. So looking to get short around 50.70, which is a touch before the level, but it's such a strong level that's going to have such a big profit zone because of how prices left that area. Probably a good idea to try to get in before that if you want to get in it, because that one's not likely to come all the way back to the area before turning. The demand on the downside here is, obviously lower, but nothing here that's likely to come into play today at all. You mean this level up here? Yeah, you barely got up there, but if you go to well, for example, let me scroll back here. Let me put a horizontal. There's other areas too. So you've got this whole area here, then that, but now we're and we'll deal with it if we get back up here. That's far from current price, right? It's well over 2 points. Okay. Next market. Oh yeah, CL. I pretty much just look at the 103XN. Why don't we take a look at gold? So in gold's another interesting one that is likely to, it's been range bound for months and months and months. It's been range bound all year. Recently, over the last month and a half, we've moved higher out of that range, and now we're starting to pull back to the origin of that move out of the range where we find some demand. The challenge is when you get down to this demand zone here, which is this little area on the weekly, you're going to have quite a bit of supply sitting above. Okay. So as a let's see here. Yeah, longer term trader in gold, not a whole lot to do at the moment. As a shorter term trader in gold, there's plenty. Right. If you go down to the 2-minute chart, this is one that I will probably look to take. I don't know if anybody here with us today trades gold, but there are multiple levels on top of each other here. This is a big money market, so just be careful with this one if you've never traded it before. This is not like it's $100 a point, and it can move very fast. Just going to combine those two. Yeah, that's the supply side, and that's down on a 2-minute chart. So this is not like swing trading stuff we're talking about here. But yeah, let's go to a bigger time frame. Let's deal with the demand side. So you're looking at this area right here. Yeah, I saw this. Yeah, we have an area here. Just be careful with this. Okay. It looks good, but what's missing for this one? Whoops, there we go. Yeah, you do have a couple demand zones, but look at the profit zone. You've got a supply zone sitting right up here. And remember, when the presence, the lack of a profit zone also it doesn't just mean don't take the trade because there's not much of a profit. It means don't take the trade because it's not likely to work out. So just be careful. Just make sure if you are interested in something like that, you understand that the profit zone is very small. Okay. All right. So this comes in, yeah, about 13.12, which is where you said. But then right up here, I would say starting at 18. Okay. Yeah. No, absolutely. You can take the long and the short. Not a problem. Just again, remember and maybe I'm overreacting a little bit just because I'm really looking for big profit zones, of which this is not. So yeah, if you want to be the buyer and the seller, great, go for it. That opportunity's here. Okay, and yeah, you do have a couple demand zones on top of each other. All right, you're probably looking at 2-to-1 there. So there you go, right there. Does that make sense? Okay. Okay, good. All right, let's keep going. Just want to pop back and take a quick peek at there's the equity index markets. Let's take a look at FGBL for a moment. Not that one. Actually, I don't. It just dawned on me that I don't think anybody here trades FGBL, so we can move on. Let's go back to the the Canadian dollar. Yeah, here, this one. Yeah, we got some levels on this chart for you. All right, so I think I've shown you where the Canadian levels are. Got our, maybe that's not the right one. Thought I had a bunch of levels on this chart. I guess not. Okay, let's take a look at the Canadian dollar. And again, with this one, make sure you've got the US dollar in the back of your mind. Okay. So for this week in the Canadian, I want to point out the supply that you need to pay attention to. It starts here. There's plenty of levels on top of each other. Now, I know we're kind of far from that at the moment, so let's go down and look at the demand side of this. This big green candle here, no matter how small of a time frame you look at, it's there, which tells me you're very likely to be back down to the bottom of it, right? That was an interest rate move in Canada. So my rule there is find a place to get short. Well, we don't have one. I mean, we do, but it's too high. I shouldn't say that. Yeah, it's kind of. But if we get back up into here, this looks like probably one of the best trading opportunities we found today, and we found a bunch. So, or I would say keep an eye on this market. You may have a supply zone developing here. If price falls another, let's see. Yeah, just a little bit more. I'd say if price, takes out these lows and goes just a little bit deeper into here, I would be comfortable shorting a rally into this. So this has not become a supply level yet, but it's almost a supply zone. Make sense? And then that would be for a move all the way back down to down to here, right? So if you want to talk about low risk, high reward, that's it. Okay. Any other markets you want to take a look at? I see. Oh, you've got your Aussie dollar. Sure, we can take a look at that. Yeah, the weekly 76.80. That's the one I've had that on the chart here. The only thing is we're not. It's going to be a while before we get there. So, but knowing that that's there, we can also look for shorting opportunities, right? And I think if you go to your 30-minute Aussie dollar, you have a demand zone. This chart is set up very much like gold. Okay, we've got demand just below, supply just above, and then you're likely to see a move down lower. And again, that speaks to the dollar moving higher. Okay, and there is room for the dollar to move higher. But just remember, there's all those supply zones above in the dollar once you get up there. So plenty of short-term room for the dollar to move up, but long-term, the dollar looks lower. Make sense? Okay. All right, so I think we've been through all the major markets. Here's my email address, sseiden@tradingacademy.com. Let me know if you have any questions. I'm happy to look at charts or go over some ideas with you. If you're having any challenges, achieving your financial goals, just shoot me an email. We can figure it out. All right, have a great day, everyone.